into another red day for Ethereum, day 2. Post the Ethereum merge down 1.5% yesterday, was down 10%, and now Ethereum is down almost 20% from some of the highs leading up into the anticipated merge of ETH 2.0. Now, we are coming towards this critical level in the Ethereum chart and forming this critical pattern which could take us to some horrible price targets to the downside. I'm going to be sharing those with you so you're prepared. We're also going to take a look at the Bitcoin chart. We're going to look at the macroeconomics, so smash the likes. Don't forget to subscribe as always if you want to buy any of these cryptos, including Bitcoin, Ethereum, or any of your favorite altcoins. I personally do so using the links in the description to BYBIT or BitGet. Both of those are the platforms I use to buy and sell and trade my cryptocurrencies. Now, as you can see, guys, this is the Ethereum chart on the daily, and I shared with you guys how I took the break of trend here. I traded this to the upside, and I took profits at the top here. And look, I didn't expect it to be that perfectly timed, but sometimes you do get a little bit lucky. But one thing I did know, and I made very clear throughout my videos, is I was expecting a lot of buy the rumor, sell the news on this merge. It was so obvious for me, and I made that clear in the content, that when you have such hype around such a binary event like a hard forks are always anticlimactic. Right, we saw it with the Alonso hard fork for Cardano. We've seen it many times before. It's anticlimactic, or the risk is too skewed to the downside. So I always was looking for a place to take out my trades. Fortunately for me, I took a really good profit here. Let me know if you guys did well on this trade on Ethereum. I know a lot of people were just trying to hold and FOMO in after the merge. That doesn't work, right? Once the traders then flood out, they go look for other places to speculate. So now we need to take a look at what are the key levels on the Ethereum chart. I'm going to share a pattern with you, which isn't the best, but it makes sense with some of the fears from the macro perspective that maybe we could be testing some of these levels. So make sure you stay tuned to the very end for that. Now, we also know Dow Jones Index is down today 1.6%, S&P down 1.4%, NASDAQ down 1.74%. What is going on? Huge, horrible day. The worst day since June 2020 came up after the CPI reading took a slight miss, even though CPI reading came down. Let's remind ourselves, guys, CPI came down, but the markets were not happy. We've covered that at extent. What happened there? We then found out that the market is pricing in 100 basis points. 20% of the market now pricing in 100 basis points. When I checked this earlier today, it was 25 basis points. So don't be surprised to see this start to edge as markets continue to fall. We also saw the US 2-year spike up to 3.92%. Okay, so again, we're seeing that on the 2-year treasury. Now, this is what's causing it today. FedEx cutting costs, withdraws 2023 guidance after first quarter shipments disappoint. Now, more importantly, they're warning of a global recession, a global slowdown. Now, you know this is the fear on a lot of investors' mind, but for a CEO of a logistics company like FedEx, who has good exposure, good visibility of the whole globe, they deliver worldwide, right? You see that data coming in. This is a lead measure. So when you hear a CEO giving guidance like this would shake the markets tremendously. They always use companies in the logistics space as a canary in the coal mine as to what could be coming further down the line. So when you see these companies, whether it's UPS, whether it's FedEx, giving statements like this, it is a little bit worrying, and that is why you're seeing the markets have a big correction here. Now, the fear in the markets are we now going to see us revisit some of the June lows? So if you take the NASDAQ here, for example, and go back to what we're saying in terms of some of the June lows, that would bring you back down here on the NASDAQ, back to the 270 levels. So they're wondering, are we going to head back into those levels? And that would then similarly mean on the SPY, heading back to some of these June lows will bring you back down into that 364 range. We're currently sitting at 383. Now, with that backdrop in mind, I'm going to show you what that could mean for Bitcoin and Ethereum. Okay, so let's now go shimmy across to Bitcoin and Ethereum. But before I do that, I do also want to show you Fear and Greed Index is dropping back to 20. This is those retail investors jumping around and moving like the wind. But it's not just the retail. It's sophisticated investors, it's institutions as well. They're fearing the fear in the market, and it's very different to what it was pre-CPI. Remember, the day before CPI, this was sitting at 34. So we've lost 14 points on the Fear and Greed Index simply because of that, and the reminder that Jerome Powell needs to come out and continue to do his work. So let me bring you back to BTC. So we're revisiting some of our June lows on BTC. That then brings you down to this candlestick here with a low in the range of that 17,700, right? That's where we created our low. So a lot of people, and I've been saying this for a while now, I'm holding out to see if we do go test those lows. And the structures have never told me that we're not going to revisit those lows yet. Now, I'm not going to call for any crazy price targets, but I do expect us to firmly come back down and test this 18,700 again. I will be further dollar cost average in there. But my worry then is when you've tested a line so many times, you've tested it once, you've tested it again twice, you've gone almost 3 times, and then one more time here. Like when you come again, surely you're going to start breaking that level. That is what I'm looking out for on the Bitcoin chart. Is are we going to lose this 18,700 level? Because that's what then takes you to the price target to the yellow line of that 17,500 mark. That is where our low was in June. So if equity markets are going in that direction, that is what I'm preparing for here on Bitcoin. Really important that we notice that. Now also, let's take a look at our daily EMA ribbon. Always look at this daily EMA ribbon, and you can see now it's firmly flipped us back to the downside. The horrific CPI reading did that, but now we've got a couple of days below it to say we're back under the control of the bears. We're, get back in your nest, right? We showed a little bit of exuberance here, trying to push past out of our channel here at 22,000, and we got slammed back in it. Now it's going to act like resistance again, just like we did here, where we consolidated and got rejected, consolidated, and then we built the strength to break through. We've got to now show some strength to push through this. It won't be easy. If we pop down to the 4-hourly chart, you can see even on our 4-hourly chart, we're well below it, right? We're trying to stem the flow of bleeding just here at 19,700 range. But if we do lose this range, we will be heading back down to this kind of 18,700 level at the bottom of the channel. That is what I'm looking out for Bitcoin. Now, what's this pattern that I'm seeing on the Ethereum chart? Well, let me show you exactly what I'm seeing on this Ethereum chart. So I'm sitting here on the 4-hourly chart just now, and you can see this was the trend that we took the trade on, right? We took the trade on here, we exited the top. What I want to do is I want to zoom out a little bit, and hopefully what you see, in fact, let's do it on the daily. Makes it a little bit easier here. Let's look at this on the daily, nice and clearly, and let's just pop this into the middle. What you can see here is almost a head and shoulders pattern. Okay, so you can see this here. You can then see your head, and then you can see your right shoulder. Now, it's not ideal because this didn't come all the way to the bottom. So it's not exactly a head and shoulders pattern. But remember, trading patterns are exactly that. They're supposed to tell you the battle between the bulls and the bears. So don't let anybody say, oh, that doesn't meet the target perfectly. You use the patterns to tell you the psychology. And the psychology here is that the bulls tried to push the price high, okay, on Ethereum. And they pushed to 17,700. They got thrown back down. They pushed again, and they went to a peak up to the top here of 2,030. Right? Then they got thrown all the way back to the neckline at 1415. I'm using this as the neckline because we touched it once and we touched it twice here. Okay. Then we pushed up again. We created the right shoulder at 17820. Okay. So that's where we're looking at. So what I'm now looking at is, do we break this neckline of 1415? So 1,415. And do we start heading down to the downside? Now, if we were to take our measured move, you're not going to like me for this one, but I'm going to show you nonetheless, and put that measure move at the neckline, and let's move it to the point of breakout. This will then bring you down on Ethereum to $835. Now, that doesn't mean I expect us to just drop there. I just want to show you the pattern that's forming on the daily chart. And if macroeconomic conditions don't improve, if CPI don't improve, and there continues to be pain on Ethereum, that is where I'll be looking to dollar cost average for some more in, right? But I don't think we're going to get there that quickly and that easily. First, you've got support at 1450. If we cross above that, okay, if we bounce from here, then great, we can get out of this pattern. If we can't and we break lower, then I'm looking at the top of the channel. Remember this channel where Bitcoin was in its channel? Let me show you Bitcoin's channel. This is the green channel here for Bitcoin. And then let me show you Ethereum's channel. This was Ethereum's channel. But Ethereum broke out and went on a crazy run because of the Ethereum merge. So if Bitcoin is breaking to the bottom of its channel, what's the corresponding point for Ethereum now that it doesn't have this merge to lean upon to push its price up? Well, the corresponding point is at the bottom of your channel. And that's at 1,000. So that 1,000 flat level is where I'm thinking if Bitcoin wants to head to 18,000, I think Ethereum can fall a lot sharper, right? Because you're already seeing Bitcoin's down 0.24 today. Ethereum is tumbling 2% today. So really important that we pay attention to this. Head and shoulders patterns give me a scary target, but also I'm looking at support at 1450. If we lose that, top of the channel at 1270, and then you're going to get another buying opportunity at 1,000. That's what I'm looking at for here on the Ethereum price. Now, let's take a look at some of the progress from the merge. And interestingly, we're starting to see the supply go up. In fact, so more supply is increasing here on Ethereum than decreasing. So much for the burn so far, but you are seeing some of the stats now start to show that the supply is increasing. If we take a look at the blocks, remember, you want to keep an eye on this. You can see here a missed slot and another missed slot. So keep an eye, just popped behind my head there, missed slot here in the red and another missed slot. We don't want this to become a regular occurrence. A couple every so often is fine. You want to keep an eye on this just to make sure that the validators are turning up and they're available. So far, it's been good. Finalization rate is still quite high, 98.56%. That's good. We want to keep an eye on that to make sure it stays good. And you want to take a look at the participation rate. Now, interestingly, with the participation rate, it did drop. Took a big drop there to 98 today here on Friday. Yesterday's lowest point was 98.2. We just fell to 98.1. So it's another spike down here after being as high as 99.3. Now, whilst it is a little bit of concern, okay, why is it spiking down? What's going on in terms of the participation rate? In the great scheme of things, it's not that bad. Like I mentioned in my video before the merge concluded, as long as this is above 66%, which is a 2/3 participation rate, we will be fine on Ethereum. So nothing to worry about until that level, but you can monitor this here on Beacon Chain. So definitely do check this out. Beacon Chain, type that into Google, you will get this and you can monitor the health of the Ethereum network. So there you have it, guys. Interesting times for the global economy. Lots for us to watch out for. Be careful there on the Bitcoin chart. I will be looking for strategic levels to dollar cost average in at that channel. If Bitcoin heads to that 18,700, I will be sure to be loading up. Again, we've had plenty of time to be loading up, but still, you can see how religiously I'm taking these opportunities because I know they won't last forever. So I'm forcing myself to go find cash, accumulate more in the market because I have conviction in these plays. If I can get Ethereum back at that 1270 level, I will be nibbling. If it goes down to that 1000 level at the bottom of its channel, the green line I shared with you, go back and check out those levels, then I will be buying me some more Ethereum for sure. Ethereum is fundamentally not the same platform that it was just a couple of days ago before the merge. They've completed their proof of stake merge. To all intents and purposes, it's going smoothly, which is fantastic. But obviously, there's still some nerves in the market around some of these stats. Now, another thing before I wrap this up, which is weighing on the markets, and I nearly forgot to mention this to you guys, is Gary Gensler. Don't think I did not notice the fact that there was huge amounts of FUD, targeted, timely FUD by the United States of America, right? So they're FUDding this market on a day that Ethereum concludes its merge after years of hard work to deliver their merge. For him to come out and make statements like this, to come out and say Ether staking could trigger securities law, he deems it a security, you know, and the merge could have caused this. This is not a good look at all, and just goes to show how prohibitive the US are being to the adoption of crypto. They've been an absolute pain. We had high hopes for Gary Gensler with his, you know, blockchain background. He taught a course at MIT. He's been an absolute pain. And on top of that, you've got him overreaching at the SEC. You've got the CFTC saying we're ready to stand up. So they just need to get their house in order. They need to provide clear regulations and guidance so companies and project founders can get on with the guidance. At the moment, you're trying to regulate a space without any clear guidance, and you're just a mess. And the US are coming across as exactly that. So yeah, that really did irk me, but I didn't want to let it make me rant this whole entire video. But just so you guys know, I saw it, I'm aware of it, we will rise above it, because at the end of the day, Ethereum delivered on a great merge, which is great for the whole crypto space, regardless on your views of just Ethereum as a whole. It's good to show that a project can get together with some really good smart developers and make amazing things happen, which sets the space up nicely. Layer 1 solutions, other good layer 1 solutions, other good layer 2 solutions. If you want to know my thoughts on what this Ethereum merge has taught us, then go watch my video from yesterday, which I'll link up for you here, because I make some interesting comments around layer 1 solutions and layer 2s, because I think the party has just started for these two groups. Thanks for watching, guys. Don't forget to smash the like button and subscribe, and I'll see you in the next one.